Good afternoon and welcome to today's CICM webinar, Operationalising Credit Risk Through Trusted Data. I'm Luke Scolthorpe, Head of Strategic Relationships at the Chartered Institute of Credit Management, and I'm your host today. We are delighted to deliver this webinar in collaboration with our very much valued CICM corporate partner, Dun Bradstreet, a global leader in commercial data and analytics. Credit professionals are operating in a more dynamic and certainly demanding environment that we've really ever seen before. Macroeconomic uncertainty, regulatory pressure, and the acceleration of digital decisioning have changed the way risk must be assessed and acted upon. It's no longer enough to identify risk. We have to operationalize the insight. This session will explore how credit teams can go beyond surface level scores to act on early signals, embed data into decision-making frameworks, and develop more agile, resilient credit strategies. To help us with that, I'm very, very pleased to introduce our speakers today. Firstly, we have Rosie Payne, MCICM, Head of Credit Management at Saint-Gobain UK, a CICMQ distinction accredited team and proud winner of CICM Excellence in Credit Management Award. Rosie will be sharing her hands-on experience of leading transformation in large, complex business. Give us a wave, Rosie. Say hello. I also am joined by two distinguished guests and speakers from Dun Bradstreet. Ravi Sidhu. Ravi is a sales leader offering a commercial view of how credit teams are adopting and adapting across sectors. And I also have David Marshall, Senior Director and Product Lead. And David will be walking us through some of the tools and data models that are helping drive smart decisions. We'll have polling, which will be live through session, so please answer the polls and also submit your questions for the speakers via the chat box. So to kick things off, we'll start with a short presentation setting the scene, and then we'll go into a lively panel discussion with our speakers. So as we look across the European landscape, it's clear that businesses are navigating some of the most difficult headwinds in over a decade. Volatility in costs and markets, growing geopolitical uncertainty. We don't necessarily want to mention too much the trade tariffs, but we will get into that. And increasing operational complexity are all colliding, and they're creating a climate where even the best run firms are being tested. And it's not just pressure, it's exposure. These macro challenges are filtering down to day-to-day risk, making resilience and foresight essential in 2025 as currencies. With that in mind, I'll hand over to Ravi, who will unpack how this pressure is materializing in the UK, where last year we saw one of the highest levels of business failure, of insolvency on record. Over to you, Ravi. Thank you.
Great. Cheers. Thanks, Luke. So hopefully, as we move into the next slide, you can see that business failures are as high as they've been for quite a while. So probably just short of what we had the prior year. And I think one of the key things to call out is that there are still many headwinds facing the UK. So there's increasing headwinds overall. I think one of the, or two of the key things that I think many will be thinking about right now is the trade tensions. So US tariffs, we've kind of mentioned that, but also the domestic fiscal challenges that the UK faces. So in terms of energy prices and the tax measures that have recently come in place. So the UK has been securing, I guess, to some extent, some deals with the US, and that's been favorable to some degree, in particular on cars and on steel exports. And that's a positive move for the UK in particular. And then you also have deals with India and the likes of the EU. Now, as it happens, those are positives, but overall, we don't think that's going to make a huge difference in terms of GDP. Well, certainly that's what our economist team are telling us. So it's a positive story, but possibly not positive enough. And I think we'll go into the detail of that on the next slide, where we'll actually look at the costs that we're expecting. So if we move forward to the next slide, we can see that costs will be rising over the next few years. Inflation this year currently is at 3.5%. We expect that to peak out at about 3.7%. And that's driven largely by the increases in national insurance contributions and the minimum wage. Now, the question really is, if these costs are increasing, what does it mean to you as a CICM member? What does it mean for your businesses? Well, from a lender's perspective, what it means is that you will face increased costs in the running of your business. And ultimately, that means that that's going to impact the profitability of your business. So if you do things exactly the same way moving forward, ultimately, it will be not just standing still, it'll actually be moving backwards in terms of profitability. But it also will have a big impact on your customers. Now, in terms of your customers, clearly there will be a demand for credit. And that will be driven by, there will be a need that they have, but equally and that's seen as a positive in my mind, that you will have that. But the negative or the downside is that those customers are a large proportion are going to be inherently risky. So it increases the risk exposure that you will have and potentially the losses that you will experience. And what I would say is these impacts will affect all individuals and all businesses, whether they're large or going right down to the smaller businesses and SMEs. But I think there will be a bigger impact on SMEs in particular. And so what we hope to talk about over the coming discussion is really about how data, technology, and the analytics can actually help you navigate in this much more challenging environment. And on that, I'll move over to David.
Thank you, Ravi. We'll just move down to the next slide if we can. So I'm afraid I'm not going to make the story any better quite yet. In addition to the market conditions that Ravi's just outlined, over the last few years, there has been even greater demand on credit risk functions to answer more problems, create different business outcomes. No longer is it just a responsibility to improve profitability, to reduce bad debt, to maybe improve cash flow. There's been a lot more demands on the credit risk function that have come in probably over the last 5-10 years. There's been a lot of focus on reducing costs, making things more efficient, onboarding customers quicker. Digitalization obviously plays a massive part in that story. How do you do that while also making sure the customer experience is as good as it can be? Ravi mentioned the volatility, the uncertainty. How can you do all these things with things changing so much in the market conditions? And the last part, which I think is becoming more prevalent, especially over the last couple of years, and I'm sure many of you noticed this, fraud attacks are becoming greater and greater and greater with frequency and size. So lots of things to consider as a credit risk function, lots of things that are making your lives extremely busy. And that's one thing we've heard more and more. How can we help businesses make their lives a bit easier, because there's so much workload to be done at the moment. So before we move into the discussion part of the webinar, we've got a couple of polls we want to put up just to understand your plans and maybe your challenges. I think the first one's around your plans. So we'll take the slides off for now.
Okay, thank you very much. I'll vote to launch the poll. So first poll, what area of your credit function are you most looking to improve in the next 12 months? You have onboarding and risk assessment, monitoring and alerts, collection strategy, automation systems, or team skills and training. I'll give you a few moments to answer, please. Thank you. Okay, just a few more seconds and then I will close the poll and share the results. Okay, thank you very much, everybody. And There we go.
Yeah, so it's a clear winner. Automation and systems. Yeah, a lot of focus on automating all types of communication or cash application. They're the key ones, aren't they? Yes, that's interesting. Okay, good. Yeah, and joint second is onboarding and monitoring alerts. Okay, yeah. Well, that's certainly in this space, BI use. Okay, good. And then we're going to go on to the second poll.
Yep. Me. Okay, and we're going to launch the second poll for you guys today. So number 2 is, what is your biggest challenge in the credit risk right now? We have data quality, speed of decision making, rising bad debt, aligning credit and commercial goals, fraud prevention, or other. And I'll give you a few moments to submit your answer. Okay. And we are going to close the poll now. Thank you everybody for participating. And there are your results.
Aligning credits with commercial goals. Yeah, that's certainly policy focused, and that's the clear winner there. And then fraud prevention, reducing that risk, is at 18%. Any thoughts from the speakers? Any thoughts from the panel on that one?
So I think
Ravi?
so I think the first one around automation and systems, I think that's very much in line with what we're hearing in terms of improvements. I think a lot of people are catching on to not just automation. I think it's all the buzzwords, AI, technology, and how they should be enhancing things. So I think there is a lot of conversations happening about it. And I guess a lot of people are probably thinking how they start, and hopefully what we talk about as we go through this is going to be, I think, valuable. And then aligning credit risk and commercial goals is, I worked within banking previously, and I would always say that's one of the biggest challenges. Making sure that you're not leaving anything on the table, making sure that balance is right. And there's always that constructive tension between different functions, ensuring that you're still supporting the business. So yeah.
Yes, it's a balancing act, isn't it? Credit versus sales. We focus in on those internal stakeholder relationship build. It's an ongoing thing. Fantastic. Okay, good. So we've done the polls. Thank you to the presenters with respect to that short presentation. We're going to move into the panel discussion, and in the hot seat, first up is Rosie to give us the credit voice. So Rosie, just focusing in on recent years, what have been the key advancements in commercial credit risk? And what are the challenges you have faced when implementing change at Saint-Gobain?
Yeah, I think there definitely has been some big advances in the credit risk space, particularly the increase in automation, in digital tools, in using AI. In particular, I think for credit risk, now having tools available where we can start to really get a blend of external data, so from agencies, blending that with our own data and what we know about customers and our own payment data. I'm sure we've all felt the pain before of trying to do that ourselves in complex Excel spreadsheets and things like that. So now starting to have tools available where we can kind of leverage that data really easily, I think has been a huge advancement. But in terms of challenges, I think as you touched on in the beginning, Luke, and in David's previous slide, as a credit function, we wear so many different hats and touch so many different parts of the business. So, whether we're trying to grow the business, and onboarding new customers, trying to avoid fraud while we're doing that, reducing aged debt, increasing cash collection, we're doing all of those things and trying to do them really well, but also kind of embarking on that journey towards digital transformation. And it's really, really tough. You can't underestimate the time and resource that it does take actually to go on that journey to using more digital tools. And I think particularly for us as well, I'm sure there's others on the call who operate in a shared service centre as we do. So we're dealing with lots of different business units within Saint-Gobain. They all might have slightly different processes, little quirks within the processes. We've got most of our businesses use SAP, but they use different versions of SAP. So all of those things add different layers of complexity, I think, to moving towards digital tools. So yeah, we can't underestimate, I think, the time and the resource that it does take to implement those things. And I think I was having this conversation with somebody in my team last week about before starting that journey. We can't recommend enough really taking the time to challenge yourselves to look at your processes, look at your data beforehand. I think trying to make sure that your processes are as lean as possible and consistent as possible, and looking at your data as well. We all, kind of put off doing the master data cleansers and things like that. We've all left it too long. But really taking the time to make sure you've got clean data and accurate data before you start putting them into your new digital tools, because otherwise you're just kind of pushing square pegs into round holes, and the process does become a lot more painful. So that's definitely a key takeaway for us, being quite a long way down our digital transformation journey now. That would definitely be a key takeaway and a top tip from us.
Yeah, I think I would definitely agree with that. I've gone through various iterations of upgrades of decision engines and solutions, and I think one of the things that is a challenge is, do you replicate exactly what you do today and just copy that into the solution, or do you actually try and understand what you were trying to achieve with those processes, some of them which will be legacy processes from maybe 10 years ago, but they're still there because the system's working. And so I think it's a balancing act in terms of working that out, but I think there is a really important need around cleansing and understanding what components, because the technology itself will offer different ways of doing things, and sometimes you need to adopt those. So it's not about doing it the same way, it's about doing the best way with the solutions you now have. So yeah, definitely echo that.
Yeah, absolutely. It's that increase in best practice, isn't it? And just challenging yourself to not do it the way that you've always done. The systems that you use will all have their own kind of parameters and limitations of the processes you can actually put into them. So yeah, I think it's that making them as lean as possible and as consistent as possible, definitely.
Rosie, that's quite difficult to do as well when you've got your day job as well, isn't it? So it's difficult to do your day job and then think about any transformation on top of that too.
Absolutely, it's very difficult, and that's very much where we are right now. It's tough, but
yeah, short-term pain, long-term gain is the ethos that you have to keep on reminding yourself.
Absolutely, we're nearly there.
Really generous insights there, Rosie. And yes, I suppose the key one here is if you don't refine and then you go on that digital journey, that transformation, it's just gonna break faster, isn't it? Everything's going to break faster. And thank you, Ravi. Okay, moving on to the next question, and this is for David. So from a D&B, from a Dun Bradstreet customer perspective, are these challenges consistent across the industry? Are you seeing the detail that Rosie's given us? Are you seeing that being echoed?
Yeah, absolutely. We've been doing interviews with customers probably for the past 2 years across the breadth of our customer base, which can be from the largest banks in the world to some of the smallest businesses in the UK, and everything in between of different industries. And we talked to them about the pain points within the credit risk functions. And the one that comes to the top is the one that came to the top of the first poll. So that was lucky for us, I think, maybe, or just maybe that's the main theme. It is the automating the processes. A lot of our customers, and they'll readily admit it, I'm sure there's many people on this call will say the same, they're still very manual in their approach to credit risk assessment. And that's fine. That's the way it's been for a while. And you trust your process, you trust your people, and hopefully you're making the right decisions and everything's going well. When the workload gets greater and you're dealing with more and more applications and onboarding and things like that, that becomes more difficult, and maybe it becomes a bit slower and things like that. So we often hear the story, yes, we are still manual, but we do want to move to a more automated digital onboarding solution, but we don't want to lose the risk assessments that we have in place. The person who eyeballs the report from top to bottom and makes sure it's the right business to do business with. So we get a lot of how can we take those first steps? How can we, that challenge to us is how we move to an onboarding solution which fulfills our risk assessment, also means the friction for the end user is minimal and the customer experience is great. So it goes back to all those outcomes that are required again. So yeah, very similar story to what Rosie said and what came up on the poll. The one thing that's come up more often, more recently, is the piece around fraud prevention. So we get this balance between customers of ours wanting to move to a fully onboarded automated solution, but then they open themselves up to fraud. And it's happening quite a lot. So the more digital we seem to be getting, the more fraud gets through the door. And I don't know whether people will feel the same on this call, but commercial credit fraud seems to be on the rise. And is a big thing that a lot of our customers talk about. It's probably the second biggest subject that customers want to talk to us about at the moment, mainly because fraudsters are getting far more sophisticated. We are seeing documents that they've created using AI tools which look exactly like the documents they should do. We're seeing their techniques improve. We're still seeing some bad fraudsters, no doubt, but there's some really good fraudsters out there too who are creating extremely good documents. They are presenting themselves as proper companies, look like proper companies, and they're hitting businesses in very short periods of time, high frequency. Just dropped onto mute for some reason. Someone's trying to keep me quiet. High frequency, high volume, short period of time, and that's having a bigger impact on our customers. So we've had a lot of cries for help for that over recent times. So they're the key ones. Automation and fraud is what we hear, Luke.
Yes, yeah. And Ravi, have you got anything to add to that? Any thoughts around that? How you're supporting customers?
Yeah, in terms of supporting customers, I mean, I think the point to reiterate, I think, is change is difficult. In terms of, change is difficult. And sometimes it's more about what are the immediate next steps that need to be taken. So often people talk about, large transformation projects, but in the short term, there are some wins and they can help in terms of providing the foundation for how you move forward. So I think it's quite hard to kind of sift through that. It can be quite a challenge in terms of what does that path look like. But I think that's part of where you work with various partners, Dun Bradstreet included, where that foundation, those foundational steps can be kind of laid out, and you can get that return on that investment, hopefully in the immediate term, and then also ongoing.
Thank you, Ravi. On to the next question then. So what are the recommended steps to enhance the capability of the credit risk function? That's to you, Ravi. Take that on. Thank you.
So just recently we've launched a new initiative, and we've called it Credit Accelerate. So by its name, you can get the idea that it's about moving things forward. It's about the automation piece is about that transformation journey. And when we start with that, what we start off with is fully understanding what is the current capability within the business, within that customer's business. Where are they today? And then where do they aspire to get to? And we talk about, in the next year and also in the longer term, what are the key drivers that they want to improve? Because all businesses will have slightly different problems and they want to solve different things. So for many, it will be things around bad debt. Sometimes it's around growth. There could be issues around data quality or customer satisfaction. Whatever those are, we highlight those. And we kind of we focus in on those, and then the initial step that we always start off with is, with Dun Bradstreet data, we talk about doing retrospective analysis. And some people on the call may be familiar with this because they may have gone through this exercise previously in terms of retrospective analysis. But just for those that are less familiar, in essence, what we're doing is going back a year or two or beyond and looking at, if you had our data, if you had our scores, would you have made a different decision with our guidance? And as a result, would you have saved more money? Would you have been able to make a better decision? Would you have been able to make a quicker decision? Because we could provide the logic to immediately, automatically accept the ones that were really good risk and automatically decline the ones that were the poorer risk. And then hopefully you're left with a smaller portion that are just, the ones that you want to review. But ultimately, that is really what it's about. It's about starting with the analysis, and that helps feed into the business case. So it's really, so hopefully that kind of gives you the view around the tactical and also the strategic, and then moving in a stepwise process through those stages.
Thank you, Ravi. To focus in on the customer's voice again, so over to Rosie, and looking at collaboration within the team. No doubt you've had this in folds, but if a colleague, peer, or somebody who's reporting into you, if they're bringing an idea of improving the credit risk function, process, what have you, what guidance would you offer to help them turn it into action?
I think I see my role as a leader to very much be to facilitate and to support. So I think as leaders, it can be really difficult not to kind of take on problems and try and solve them ourselves. I think it's really important to give the team the opportunities to develop in implementing those changes themselves and exploring those changes themselves. So for me, I really like to be the facilitator, to champion what they're doing, be the sounding board, and try and leverage as much of my own experience as I can to support them. But I think I would really encourage people, if they've got ideas for changes, to enhance processes that they want to talk to their managers about, or someone more senior, I think to really think about the business impact that change will bring, really focus on tangible business benefits, whether that be, it's a time saving, an efficiency saving, cost. It could just be a customer experience improvement. And I think encouraging people to get feedback as well. Again, for us as part of a shared service centre, we're really focused on internal customer service. So we really encourage our teams to collaborate with the different business units, with different finance functions or other areas of the business, really collaborate and really get their feedback on what they perceive the problem to be, what improvements will this change bring to them, how will they value it. I think having those kind of metrics and feedback and different viewpoints really helps sell change internally. And I think also for us, we've got quite a few members of the team who are studying with the CICM, and particularly at level 5, the process improvement unit. We've seen some really good benefit with that, because we've got people who are taking those real life issues that we have and having to go through a really structured process for their assignments, of finding different routes to improve those. So we're getting the benefit in the end of hopefully a really well thought out process improvement. And then also we've got that lasting kind of knowledge and upskill within the team. So definitely that studying with the CICM has been a huge help for us as well in implementing change.
I think just to add to that, one of the considerations that is really important within any of the organizations is around how will you influence people? And so if they're analytically driven, then obviously, Dun Bradstreet, we can provide an analysis on goods and bads and what the bad rate would be based on scores, etc. But equally, we also have case studies of businesses where we just talk about a timeline of events, and that resonates differently with different people. So I think sometimes you've just got to adapt your approach and just understand what will actually make them sit up and listen as well to what you're trying to achieve.
Yeah, absolutely.
We can also offer a kind of an external view on any ideas that maybe someone in Rosie's team could have. We could offer a bit of help on a business case to see whether you're trying to make things more efficient, or you're trying to reduce bad debt or reduce fraud. Because we have experience working with different customers to try and answer those problems, we have the capability to potentially support and just be an extra pair of eyes if required.
Great to hear that Saint-Gobain are investing in their people in such a structured way, and certainly coming to the Chartered Institute for that, and future-proofing skills within the team. Very, very encouraging. Just to move on then to Ravi, and can you give us an example where D&B have worked with a UK business to analyze and implement a new credit risk capability?
Yeah, we've got quite a few examples, and we work across the industry. So whether it's financial services, manufacturing, utilities, they're all use cases that we can support. I think the one that comes to mind primarily, and it's quite a recent one, is a well-known energy provider, and they had a particular problem around bad debt and fraud, as it happens. And we provided some retrospective analysis as the starting point, and actually threw up more insight than I think even they were expecting. So one, our scores were very predictive, but even the underlying data that we have from a consumer and commercial basis, we were able to highlight specific policies that they could put in place and identify fraud cases, which they've had actually been hammered with over the last year. And so it was the combination of our data and our scores through the retrospective analysis that we had done. And we were able to deliver a final solution to them relatively quickly through APIs. But our solutions aren't limited just to APIs feeding into decision engines or various platforms. They also can be web-based solutions where you can actually do more of a judgmental approach. So that was one of the successes. And moving from and that was an onboarding example. And I think now the conversations are moving towards more the monitoring side for their businesses. So I think, that's just a really positive case where it's proven the value, and then the engagement is just actually expanding because they can see value in other areas.
Have you got anything to add to that, David, to Ravi's sentiments?
No, absolutely happy with Ravi's response there. There was a point I wanted to make about, not in the example that Ravi gave, but something we've done on the fraud side of things, which is kind of a benefit for all. We were expanding a fraud network solution that we've had for a while in the UK and US and Canada, but we want to get it across European waters too, which allows you to share with each other when you have any suspect frauds, and also search that database, a consortium really. Because as I said earlier, the fraud problem is growing, and I think we can't tackle it individually. And I think if we bring more and more customers into that mix, and we also join that with maybe some government organisations and some financial services organisations, then we could still real benefit. So that's just some way we're trying to trap or prevent some of these fraudulent activities happening in the UK at the moment.
It's very prevalently discussed at credit circles that I attend. So in a sense there, David, you're simulating that on your platform, where that sharing of fraud example is there, but you're digitalizing that.
Absolutely. We've actually found out that a lot of our customers email each other when they've seen a suspect fraud, which is good that they're warning each other, but it's not a very good way to scale if you're just sharing emails.
Not the collective.
A lot of emails.
So yeah, we're pushing more of a collective view on that one, which will benefit all.
Okay, that's great. The questions are piling in, so we will answer those at the end, because we'll have a Q&A piece at the end. So don't worry, we are going to answer your questions. But thank you for all of those. That's really good. Just to focus then on the future, the predictions, and over to Rosie. if you were to guess, if you were to get your magic ball, and wand out, what would you expect the credit risk function to evolve to? What's it going to look like in 5 years' time?
I think that the increase in digital and automation, I think, will still be there. I think that will continue to grow. David touched on it earlier, and I find it certainly in the people that I speak to in my network, there's still a lot of people who are very manual and haven't gone on that journey yet. So I think it will continue to grow. The tools will get better, maybe more complicated. But I think certainly for us, the focus will be about finding the balance between using digital tools and all the different types of data, but balancing that with also building the best team. I don't believe that these tools replace people and replace the role of the traditional credit manager. I think there's still a big need to invest in our people and invest in our teams, and I can see that Suk's touched on it in the comments about training and education. It's still so important. We're really keen at Saint-Gobain on being close to our customers. So I think it's finding that balance between leveraging as much data as we can to bring those conversations to the customers face to face. We don't want to lose that. So yeah, I think leveraging the data to have insightful conversations and still have that human element behind what we do in credit management, I think will be that will be the challenge and the balance over the next few years.
Yeah, I think what I'd add to that is I think we might be quite surprised in terms of the extent of where automation goes. I think there's been always this view that low ticket, high volume is where automation happens, and when it comes to the larger end, you typically underwrite manually. And I think what will happen, and I think is happening, is there will be a greater emphasis on automating what you can up to a point, and then there'll be a part where clearly an individual needs to review things. So I think the way that automation will happen is going to be different moving forward. And I think that's one of the key things to be looking out for, because getting a straight through process for a £1 million agreement isn't something that people are just going to let through, just through a solution. You will still want people looking at that. So, but I think that's something that we would be seeing. So I was going to actually say that there's also the other side of moving up that maturity curve, and I think there's this push to get to the ultimate destination, that final point, and actually a lot of the conversations that, like I say, we have today, we're able to talk to customers, some that are not equipped at the moment for that sort of change, but they do want to create that. And so having the capability, whether that's a web solution in the interim, just gets them a feel for new data sources and a level of automation that actually provides that improvement. But there's always this challenge around change and how you can actually manage that and adopt that. So I guess, Luke, there was a question that I had more for yourself around the Chartered Institute's perspective on what are the key areas where credit professionals can actually upskill to meet those sorts of challenges. Because when we're talking to customers, we talk to many, and while we have really positive engagements, sometimes some people absorb and take in that information. You can see either it's the level of experience and they've been around for a while and they know that certain things are coming, or maybe there's some other kind of like guidance that they're receiving. So I'm just curious to know, from a CICM perspective, what's your view on that?
Yeah, so sort of upskilling risk, and those areas, and what are the key challenges? Yeah, I suppose, from our perspective as the Chartered Institutes, we I think we've identified sort of 4 main areas. Firstly, data literacy. So there is a need to upskill from an interpretation of risk indicators and applying them meaningfully across the credit cycle. So not just about reading scores, what have you, but more about understanding the why behind them. Secondly, I think systems, so system confidence. So we talked about automation and decision engines. They're becoming more prevalent, aren't they, in terms of being embedded. So credit professionals need to engage with those tools really proactively, not passively, not be resisting them. And thirdly, probably seeing a real need for stronger decisioning capability under pressure. So it's when you have to deliver that judgment and that decision quickly, and it's when it's uncertain, the circumstantial context, so that's changing. And finally, I suppose commercial agility, you speak about that quite readily here, Ravi. So it's aligning your policy, your credit policy, essentially your main governance, with those wider business goals. So like we've mentioned growth, we've mentioned customer retention, we've mentioned fraud, David's mentioned fraud prevention and reduction. And sort of these, I suppose these themes are really helping shape CICM's professional standards. We launched those when we became chartered some 10 years ago. And they evolve and they get reviewed. But also our education, so our qualification pathways, Rosie's mentioned level 5 diploma. We've got all those pathways going all the way down to level 2, GCSE level. But also we have a lot of training, so vocational training, workshops, soft skills, technical skill development. So it's all feeding into those. But we're just ensuring that credit teams aren't just operationally strong, but strategically equipped for what's next. That's essentially it, really. From our end, yeah. Thank you, Ravi.
Cool. Thank you.
Now, do we have the last poll? Is that the one that we've got now, Becky? Do we have that?
I will launch that for us now. So this
Thank you.
Final poll. And you will see it on your screens now. So final poll, how confident are you in your team's current credit risk capacity? So we have 4 options, very confident, somewhat confident, unsure, or not confident. I'll give you a few moments to answer that, and then I will end and share the poll. Okay. It's quite a quick one, this one. Okay, I'm going to end the poll now, and there are your results.
Okay. What do we make of that, guys? Somewhat confident, 50%. Very confident, it's quite so over a third.
I think we have some good risk professionals on the call by the sounds of it.
We've got some very senior people. Yes, we do. Yeah. Some experts there. Yeah. Okay.
Yeah. I mean, that's good. I mean, it doesn't mean that. I mean, these are probably the kind of people that are always looking for improvements, and so therefore open to, new ideas and things like that. So I think, people that are showing that level of confidence, it would just kind of illustrates the adoption of what we're talking about probably is in process to some extent.
Yeah, thank you, Ravi. Should we head into the Q&A? So we've got lots of questions here.
Yeah, do you want me to fill them out to you?
Yeah, if you could support, thank you.
Yeah, of course, no problem. So first one from Amanda, are you seeing any rise in money laundering? And if so, how are you tackling the problem, please?
I think you know the answer, Amanda. Yes, absolutely, we are. All the different types of fraud we're seeing arising, unfortunately, money laundering is probably top of the list. Yes, we are trying to tackle it in different ways. One is actually making sure there's more of a collective approach, but like I said before, government, banks, that kind of approach. So we have the data, see the data flowing, the money flowing, and see what we can do about it. But also within our own with our own space, we're trying to look at businesses and people within our databases and try and find network signals, something that doesn't look quite right with a business profile, whether it's the people behind it, whether it's the location of the business, whether they've had any kind of tags to fraudulent money laundering activity in the past. So it's really trying to get more sophisticated in what we're looking at to make sure we can tell you if we think there's a problem, whether that's money laundering or a different type of fraud. It doesn't really matter, but just to warn you that something is not quite right. And we are seeing some fascinating items on certain businesses that have created fraudulent activity over the last 24 months. So more to come on that, but yeah, it's an interesting and worrying subject.
Great. Thank you very much, David. Moving on to the next question. Are you seeing a trend in the amount of bad debt written off? Can you recommend a best practice about what data to use to calculate doubtful debt provisions?
Okay, so I think, we have scores that we have developed that will give a prediction around probability of defaults, probability of business failures, and so that can certainly be used. What I would say is actually quite an interesting question, because within financial services, we have more sharing arrangements and we can see, or customers can actually use some of that. So we have benchmarking solutions where you can compare yourself to the industry, as an example. We haven't necessarily thought about doing that from the non-FS side of the sectors. However, it's actually a really good point to raise, and I think it's something that we probably could do to some extent with the data that we have. So in terms of giving a benchmark almost against your industry competitors and other industries, it's probably something we could help calculate. So probably a fuller question response offline, but yeah, we do have a vast data set that we could probably support that with.
Wonderful, thank you very much. As Rosie mentioned earlier, there's quite a bit of support regarding the training and education, and there's a question here from Jane as to what type of training has been most beneficial. I think that's probably to Rosie.
I think for us, and particularly Jane, you've mentioned the cost as well. Having people on the level 3 apprenticeship with the CICM, if you're in that apprenticeship levy, then absolutely make the most of it. We've got quite a few members that are going through or who have gone through that level 3 and are moving on to level 5. So that's been really beneficial for us. And I would also say it's not so much a training, but more, I guess, a journey and experience with the team, but the CICMQ process as well, because it really kind of brings everyone together as a team, focusing on those 6 areas and kind of getting yourselves up to that standard first. It's a brilliant process to go through. I can't recommend it enough.
I would just echo that. Yeah, thank you, Rosie. Yeah, accessing the levy, if you are a levy funder, a levy payer, or if you are not paying into the levy, you're still going to get access to funding. But yes, we operate in a very effective way, whereby we will link you as an employer to the apprenticeship training provider. So we have relationships with people like Kaplan, CTech, those sort of entities, and we do that very, very quickly, and it's time efficient. You don't necessarily have to have an infrastructure where you have an apprenticeship manager. We can do most of the legwork for you. So yeah, if you are levy paying or non-levy paying, yeah, certainly, come to us and explore those. Best way of getting your guys qualified through funding. So yes, absolutely echo what Rosie's saying. Yeah, thank you.
Thank you.
What other questions have we got, Becky?
We've got one final question. I'm excited about the use of AI. This is from Leon. However, he does have a concern. He's had a fair few examples, of which softwares are communicating with each other offline, creating further relationships and processes which we may not be aware of. The concern is that with these being discussed, we may have oversee the function and mapping of discussions softwares are having with each other.
That's a massive question.
It is a massive question.
I think there are concerns. I think I guess I can talk to how Dun Bradstreet views the use of AI and technology, and I think it's cautious, but obviously at the same time we have controls and certain boundaries that we have in place in terms of what we will and will not do, I think it may be useful to understand or provide that guidance to clients in terms of what we hold as standards, because obviously we look after a lot of data, and so as custodians of that, the way we use AI and or any other solutions, it's front of mind. But I don't think we're going to be able to answer that question because it's a concern that probably everybody has, and it's broader than probably this discussion, but a really good question.
Absolutely. Thank you very much. That brings us to the end of the questions. However, I'm just going to put my email address in there. So if you do have any other questions for any of the presenters today outside this session, then feel free to send them over to me and I will field them out to the relevant presenter for you. Thank you.
Well, thank you very much to our speakers. Are there any final thoughts on what we've discussed? Are there any final thoughts? I mean, there is a question that I had prepared, so I don't know if I could float this over to Ravi and David. We've got 8 minutes left, so I think we're good for this. So really, it's about data and how critical it is. So, why is data so critical to making more accurate decisions?
Yeah, I mean, data, that's the business that we're in, and I think what I would actually put before that is good quality data is critical, and at Dun Bradstreet, in terms of how we curate and the standards by which we, people take data from registry information, but it's what you overlay and it's the way that you kind of go through that processing in terms of the quality and control around it. So data, yes, good quality data is clearly critical. We see it as the fuel that goes through the engine, whether that's a decision engine or whether that's a credit department. So fundamentally, it's really important. But I think one of the analogies that I really do like to use is around almost like a three-legged stool, where you have your technological kind of component, the data that you use, and then the analytics. And I think when you have all of those together, that's really where it becomes really powerful. It's not just about data in isolation, or the tech, or the analytics. Once you have all those pieces, what you're able to then do is build on what data is really kind of driving in terms of decisions, and also adapt over time. So constantly improving. It's almost like an iterative approach. You use your analytics to actually then inform better decisions moving forward. So I see data as a component. It's clearly really important, but it's really important as part of that cycle of constant improvement. I hope that answers the question for you.
Yeah, I think it's just one thing to add to what Ravi said there. It's also, unfortunately, you can't stand still with the data. We are constantly layering more and more data into our database because we need more and more data. We need to make it more predictive, and data changes over time. So something we used 5 years ago may not have been relevant today, and something that's relevant today we haven't got. So we have to go and find it. So the data evolution doesn't stop. It's the insight you can produce in the data, which Ravi eloquently put within the analytics or the decision engines. There's a lot to it, and it's not one thing we can stand still on, unfortunately, or fortunately.
Well, closing comments then. So thank you very much to Rosie, Ravi and David for your insights. And thank you to everybody that's joined us live today. Thank you very much, Becky, for helping with the questions and the technical pieces. Thank you very much for that, the polling. So we've had a really good session here. What I guess we've heard reinforces a clear message, which is all around credit risk, not just being around or focused on adopting new tools. It's about transforming how we think, how we interpret, and how we respond. So whether it's automating decisions, strengthening early warning systems, or building confidence in data, the opportunity lies in using insights more intentionally across our entire credit process. So if today's session has sparked ideas, or if you're looking to benchmark your current approach, both CICM and Dun Bradstreet would be very happy to continue the conversation. You will be able to access this recording in the members zone. So that will be available after this. We're going to be sharing the presentation deck that we detailed. And just again, thank you very much for joining us. And we look forward to welcoming everybody on the next CICM events. Please look out for them. Please register for any events that you're interested in. Talk to CICM about any interest in any if you need any clarity. But go onto our website, it's all there. But certainly until next time, many thanks. Goodbye.